Happy New Year, traders. Welcome to the weekly recap. This year we're going to start with the small account challenge that started this week, and that is where I go back to a $10,000 account and try to grow it as much as I can. Using a small account has a lot of benefit because it lowers the risk, lowers the overall amount of money I can lose. In this environment, the slow market environment, it's a lot better because it keeps me from making potentially bad trades and taking too much size. So that is why we're starting to do that, and it is a challenge. Growing a $10,000 account is not easy. Well, without further ado, we're going to jump into the first trade. Before we jump into the first trade, I would like to mention that at the end of this video, we're going to be journaling the trades of the week. The first part, we're going to review the charts, just like every week. And in the second part, we're going to be reviewing the trades that I did take and seeing how I go through a journaling process and how I look at my trades. And hopefully that can help you do the same. And I hope that can help you become a better trader as well. So without further ado, let's jump into the first trade. The first trade is BLFE, and that happened on January 4th. Now this is a first red day OTC short, and I have not seen this setup for a long time. So when this came up, I was very excited to see it. Before it had its first red day, it had 3 green days. It was very overextended, and my target on this one was 160. So from this crack all the way to below 160, that was my target. Now I didn't end up trading this. I stayed away just because it didn't have enough volume, but if I did trade this, it would have worked out. So missed opportunity. I did try to dip by the panic, although it was a bit too choppy. I would include this as a OTC panic dip buy, but it was just price action here is just a little bit too choppy for my liking. So we'll just categorize this as the first red day OTC short. That would have been a pretty good setup to play, and we don't see many of these nowadays, so it's refreshing to see them every once in a while. Not a setup that you should be looking into nowadays, but it was really popular last year. Okay, so now we're going to the next setup. Now this is BITO. This happened the following day on January 5th. Now this was a support crack short. Now you can see BITO had the support going to 29 or so, just below 29, and that translated to 45.5 thousand on Bitcoin. So this was the 45.5 thousand level, and for a number of days it tested that level. Now my problem with this setup was it had its initial first red day where it looked like it was gonna crack, then it came back and had a little pop over that level. Second day had the same thing right here. Third day, same thing, and then the actual crack happened on the 5th day. I had been shorting it for the previous 2 days before the crack, and I just kept getting stopped out, and I didn't want to attempt again on the actual crack date because I thought it would just come back, but alas, it did crack. This kind of setup usually is very smooth, especially when the trend confirms on Bitcoin. Usually you can see a nice trend happening right after. There were puts on this play as well. Probably the 28 weekly puts would have been nice on this one. Again, I missed out. Crack of a key level. The next setup happened on the same day, and it was also a support crack short. Now these, I say these because there's more than one. You're looking at one. This was a support crack short of the vaccine plays. So a lot of them started fading pretty hard, and we're looking at NVAX, and this one had trouble once it started cracking below this 138 mark right here. So right here, when it started cracking that's where I would have want to short it or get puts, probably 130 puts. Get there, write it down. I think that's exactly what I did. I think I had the puts, but I ended up exiting a little bit too early. I think that's what happened. Overall, this was a very substantial move. I think this is over 10% move from peak to trough. That's around 10%. It wasn't just NVAX. All the vaccine plays had similar moves. mRNA also had a crack of its support right here, crack of its 230 support. This one is a little bit cleaner, and I would have played this 2 round 220. So I would have had the 220 puts on this one and just wrote it down. BNTX, similar story. So this one, the support crack isn't very evident. Just kind of a sympathy loser to mRNA and NVAX, to be honest. Next, we're going to look at a listed panic. Now, RIVN is a fan favorite. It's one of my favorite stocks because it's panicked before, and this time it panicked very, very nicely. And, you know, from these ones, I take the panic from all the way to the top of the trend where it started to have first red days. So again, I'm just zooming out to help you visualize. So right here around the 107 area, that is the top of the panic, and obviously it led through to a massive sell-off on the 6th of January. Now that is very evident because we can see all those red candles. Now that was very obvious because we see all those red candles, and if you look closely, you also have the volume spikes right here, big volume towards the bottom. Now that is very, very key. You always want to see that. Now if I can connect the trend lines here, it looks something like this. So as you can see, you have these volume spikes where it bottoms out, two red candles, stabilizes, forms a higher low, and then it cracks above these red candles, form a higher high. Now the entry right here is actually just over 78, so this would be your entry right here. The reason for this is just because we want to have that confirmation. You know, it really sucks, and I've done this so many times, where I'd have a stock that's panicking and it looks like it's bottoming, and you have the volume spikes and you have the green candles, and you get in, and then what happens is it cracks through low day, and now you got a falling knife and you have to exit into that crack, and then you get slippage, and now you're down 5, 6, 7% depending on where you entered. The main goal of dip buy morning panics is to avoid catching a falling knife. If you're late to the move, that is perfect. Don't try to catch the bottom. I've done it so many times. I've gotten cut so many times. Falling knives every single month I've been cut. Wait for the confirmation. This, what I'm telling you, what's happening at the bottom here, you have multiple levels of confirmation. Volume spike, including all these red candles turning into green candles, another level of confirmation. You have the higher low, that's another level of confirmation. Cross above this trend line, that's another level of confirmation, and then pop over this first bounce, and that's where you enter. You have all those confirmations, and then you just enter on the last one, and that's what I did. So for RIVN, the intraday panic was 29.7%. that's the panic from this day all the way to the bottom of this day right here, and my target bounce was around 13.9%. That's where I was exiting. I think that's in the 84s, something like that, and then it ended up bouncing 17.6%, so it went up to the 88s, but I was exiting far earlier than that. And then finally we have DWAC also happening on January 6th, and this was a news release. So DWAC, they released some news of the launch of the app, and it started running. Now when it started running, I immediately jumped in, even though I was almost 10%. I was chasing it up almost 10% from these levels, but I knew this was a former runner, big meme stonk from last October, that it has the potential to run. It has a lot of eyeballs on it every time they release a PR, so I jumped in on it, chasing it 10%. Now I never do this. This is the only exception. A recent meme stock like this is pretty much the only one out there. And I was using the recent resistance level of 65 from this day right here. That was my exit. That was my exit goal. Get out before then. I'm not going to test to see if it breaks through. I get out before it breaks through. So I was selling in the 60s and the 64s, and I played it very well. I didn't hold it overnight, and the following day it gapped down. So I played DWAC beautifully. That was a great trade. That was very nice. All right, that about wraps up the weekly recap. I will see you next week. Stay tuned. So I'm going to be going over the journaling process right now, how I do it. What I have here is the trades for the week of January 3rd, and we're going to dive into each one, and I'm going to show you how I do it and how I make it so I can categorize each trade, see my mistakes, and how I can use that to improve going forward. So the first 3 trades here, these are actually not my setup. The good thing is that I kept losses small. I'm going to go here and I'm going to assign a mistake because that's in my mistakes section. Okay, now we're going to move on to the next 2 trades. Both of these were Supernova halter panic setup that ended up being China pumps, and they just fell apart later. So I'm gonna label them, call that setup my halt down setup. So halt down simply means a panic dip buy that halted. That's just how I categorize it. As you see, I have a lot of different categorizations. A lot of these are setups that I don't trade anymore, but I have in the past, or setups that needed some distinctions so they could be separated from a similar setup. I'm looking at BITO. Let's see what I did there. I forget. As you see, they have this amazing chart that you can use. See kind of what happened. Now this one, I got stopped out right before the move. Embarrassing. So this would be a support crack short that I got stopped out at, and I should have had my stop a little wider to let the move happen. Crack short. I would also call this a correct put setup because I'm pretty sure he alerted, or if he didn't, that would be something he would alert. Could have kept my risk small, however. My stop was too close and I exited too early. There we go. The next setup is actually a morning panic. OTC morning panic over $1 because those usually work out. They're under $1, they don't tend to work out, unfortunately, as we've learned with OWUV. So that's why I labeled that as not my setup, even though it's the same pattern. The price is just too low. That's why it's not my setup. Let's look at BITO again. I think I again got stopped out literally right before the move. Unfortunately, on the right track, but don't got anything to show for it. So we're gonna label this as a support crack, and then we're gonna label this as a crook put. And again, got out too early, and the stop was too close. This was a tough one, huh? Because I tried twice, and I got stopped out. Right after I get stopped out, it actually does the move. NTRB, this one was an interesting one. So this is a new setup I have been attempting. Look at that, about right at the top. This one don't have a lot of experience, obviously, so I'm gonna continue to avoid trading the setup. The good news is that I kept my losses small. See, most of my losses here, they are under $100. Now, let me label it. And because this was a speculative setup, things that aren't my setup, I want to see tiny losses. These are good. These are around 10-30 bucks on my setup. The losses that I take on my real setup are a lot bigger, so that's what I want to see. This one, I think there was some slippage. There's some slippage in this trade, and that's why I didn't exit. Me at my stop in OTC, they move a lot faster and it's tougher to exit, so that is understandable. Now what's going on here? So this was another support crack short, but I didn't really capitalize that much off of it. I took a small part of the move, so it's another support crack short and a crook put. Again, I don't know if he alerted this trade, but it is the type of trade I think he would take. So for the other trades that are labeled as crook puts and they're not options, that's just for my reference. I can sort out the options trades by themselves and just look at them individually. So I am aware that not everything labeled crook put is an option. Put that there. And obviously I got out too soon. Got out too early. That is my mistake for that one. Now after that, I had a little more success with the shorts on these pharma companies. This one a little more successful. Again, the same setup. So because it's the same, I'm going to do them all at once. So I pretty much just check off these boxes, then I choose what setup it is. Boom. Then after that, I again choose what setup it is. There we go. Bam. Most of these I think I did exit earlier than I should, but I also believe I exited where I wanted to. I'm not going to give them that mistake because I captured the move that I wanted, even if it wasn't the entire move. I captured the meat that I was satisfied with. Here we go. I remember this trade. This was really nice. Always get a feeling to see your trade work out. And then this was listed panic. So again, see my entries and exits on the chart. Look at that. You see where VWAP is selling into pops. I mean, I don't know if I could have played this any better. I'm not bragging, but this was a really good one. Almost 60% return. So this one was an option. This was an option trade. Let's see. I just want to see the strike for reference. So $90 strike. I actually should have played the $85 or $80 strike. That would have given me a much greater return, but I know that now. So in the future, this type of setup, I'm gonna do that. So this is just a panic. That was a really good one. No mistakes. And the last one is DWAC. So I believe they released a PR. And this was a news play. I usually don't trade news plays, but again, got in while it was moving. Didn't consider this a chase because I knew how many buyers there usually are on every single PR and news event, and I sold it into resistance. So that's why these sells look really good. I actually don't really raid setups like this, so I would say this is the first green day. I don't even know if I have that. First is green day with positive news. As you can see, I have a lot of setups, so it takes time to get through all of them. So set positive news, PR, press release. Yeah, no complaints with that. So just analyzing my trades for the week, I had a lot of really good trades. The trades that didn't do so good were at the start of the week, where I traded trades that weren't my setup. Later on in the week, I did a lot better. And what's also good is that I kept the trades that weren't my setup to small size. I got small losses out of them. And then the trades that were my setup, or that I knew how to trade, I really maximized most of those, except for BITF. So if I want to look at my options performance compared to my stock performance, all I have to do is go to more, and then I go to assets, and then I can choose. So options. These are options only. So with my options, I made 274 for the week. And then for my stocks, I actually lost money. Lost $36. Now this doesn't mean I should only trade options. If this was a pattern that repeated itself over a large time span, then I would consider it to be that. But for now, it's just an interesting thing that I will keep track of. It's not something that definitively tells me that I need to only trade options. It's just an interesting abnormality that I will keep in the back of my mind. And if it comes up again, I'll think about that. But if it doesn't, it's fine. That's actually a big part of journaling, is seeing certain things that jump out at you, keeping it in the back of the mind, and then when that thing comes up again, then it might be time to take some action. So that's how I do journaling. Here I just showed the basics of how I do it. I didn't go too far in depth, but this is the week of trades, and I categorize them by setup and mistakes. So that's it for the journaling part.